Which money can you access first from your Roth IRA? These are called ordering rules. And we're going to talk about this right now because it's important. And I don't think a lot of people understand this. I think they get a basis of it, but not to the extent that they need to know. All right, so let's dive into this. We're going to look at directly from the IRC, the Internal Revenue Code, and then look at a couple other sources as well. And of course, you can always chime in your comments down below if you have something to add. Positive. I don't like the way Josh looks. I don't like his hair. I don't like his politics. Gone. If you have positive stuff to add, not saying not great, but positive stuff to add to the conversation, love to have you. But if you're just going to be, sniping at me, you're gone. And of course, if you do love the work I do, you can always buy me a cup of coffee. It's the Doobly Duke down there. Just a simple cup of coffee. Your old buddy Josh, decaf. And if you want to join my locals channel, it's in the Doobly Duke down there. We'll be going live at 4 p.m. Eastern time every Friday. So that's going to be about 6 hours from now. And you can join locals $5 a month, dude. $5 a month every Friday, 4 p.m. Eastern time. All right, so let's go right into it. So here's the IRC, the Internal Revenue Code. This is publication 590, which just crushes. I mean, just we're just gonna go into this. If you receive a distribution from your Roth that isn't a qualified distribution, see my previous video I did on qualified distributions. Qualified distributions means it's not subject to any income tax or tax penalty either. 5 and 59.5. 5 and 59.5. Whenever you talk about tax-free distributions from a Roth, just keep in mind that's a qualified distribution. 5 and 59.5. 5 and 59.5. We used to be in the old estate planning realm. 5 and 5. $5,000 or 5% of the corpus or something like that to qualify for whatever it was. I just can't remember. Distributable net income on trust, that's what it was. Whatever. But anyway, 5 and 59.5 to get a qualified distribution where the entirety of your distribution is tax-free. We're not talking about it here, though. There's a set of which contributions, including conversions and earnings, are considered to be distributed from your Roth IRA. We're not talking about withdrawal of excess contributions. We're not talking about that. All right. So first and foremost, your regular contributions come out first. All right. Regular contributions. You put $5,000 in, it's worth $6,000. You can take your $5,000 out tax and penalty free without touching the $1,000 of gains. All right, now this isn't FIFO. A lot of people are going to make the mistake assuming this is FIFO. FIFO means first in, first out. So I put $5,000 into my Roth. It grows to $1,000. It grows to $6,000. So I have a $5,000 in, $1,000 is my gain. The next year I put $5,000 in. It grows another $1,000. All right, so basically with FIFO, this plus this is my first in, first out. That's not how this works with contributions. I get access to this right here, and I can leave this alone. All right, that's how it works. Your Roth contributions come out first, tax and penalty free. Keep that in mind. Again, we are not talking about qualified distributions. I thought Roths were tax-free. If I see that, I'm banning you. I'm just joking. Qualified distributions is in the other video I just did. All right. Conversion and rollover contributions on a first in, first out basis. This is FIFO. Now, unlike annuities, which are LIFO, this is FIFO. All right, so let's go back to the drawing board here. And we'll say it's 2023. And I did a conversion in 2018, 2019, 2020. All right. So I did 3 conversions, 2018, 2019, 2020. I did, we'll say, converted 50,000 each time. All right. I converted 50,000 each time. So it's first in, first out. This right here is my first distribution, 2018. All right. Because, as this IRC says, first in, first out. All right. Generally, total conversions and rollovers from the earliest year first. All right. Now, the problem with this, the next part of this is taxable portion first. All right. So I did that conversion of $50,000, and we're going to say that $50,000 has grown to $60,000. So now I got $10,000 of gain on that amount right there. What comes out first? If I take a $20,000 distribution, all right, so let's just go back here now. It's been 5 years. We're going to get into this another video here in just a second. So we get, in 2018, I did a $50,000 conversion. 2023 is worth $60,000, and I need $20,000. All right. Well, unfortunately, the gains will come out first because that's a taxable portion. All right. That's all there is to it. It hasn't been taxed. It's coming out first. The gains are coming out first. And as it says right there, it cannot be any clearer. Taxable portion first. That $10,000 of gains, I need $20,000, of which $10,000 is my gain from the initial $50,000 conversion. The gains come out first. Because I'm under the age of 59 and a half, not only do I have to pay tax on those gains, I'm going to have to pay a penalty as well. All right, so those gains, those $10,000, are subject to ordinary income tax and a 10% penalty as well. The rest of that $10,000 isn't subject to either. All right, no penalty because I've had that Roth conversion. It's been 5 years since I did it, and no taxes. I already paid the tax when I did the conversions. Hope that makes sense. We'll talk about that 5-year rule here in just a second. It's a big deal, but just keep that in mind. So you can't say, hey, I did this conversion in 2010. I converted $100,000 in 2010, and now it's worth $500,000. And I need $100,000 to buy a boat. Well, hate to say it, guys, the $100,000 is going to be subject to income tax, and if you're under the age of 59 and a half, subject to 10% penalty. It could not be clearer. I just, don't make a mountain out of a molehill here. Taxable portion comes out first, and then the non-taxable portion, which would be the amount you converted. And again, it's not taxable, but it could be subject to a 10% penalty depending on how long it's been since you converted it. Another video on that to come. Earnings on contributions come out last. We already talked about that. Earnings on contributions come out last. So if we want some more, we'll go here. This is Cornell Law School. Ordering rules for rules applying to Section 72 to any distribution from a Roth IRA. Such distribution shall be treated as made from contributions. We talked about that. Contributions come out first. From such contributions in the following order: contributions other than qualified rollover contributions, and any distribution allocated to a qualified rollover contribution should be allocated the portion of such contribution required to be included in gross income. That's what we just talked about. Any distribution allocated to a qualified rollover contribution shall be allocated first to the portion of such contribution required to be included in gross income. Just keep that in mind. So again, you're always going to get your gains out first on your contributions. That you can, I don't want to say that's a LIFO. It's not necessarily a LIFO. Well, and that, I don't want to use that term in this regard. But your gains will come out first, and your converted amount will come out second. Which conversion will be which one is the oldest? All right, so that's all there is to it, man. I think they actually give us a pretty good example here too. The IRC does. I got it. They got Justin down here. Yeah, right here. On October 20 to 2017, Justin Trudeau converted all 80,000. Baby Castro converted all 80,000 of his traditional IRA to his Roth. All right, so in 2017, $80,000 was converted to his Roth. 20,000 of that was his basis. Now, they don't really say why he had that basis. I guess a non-deductible contributions. I'm not sure. But so as 80,000, 20,000 is his basis, which meant, where's my blue? Dude, why do I always lose my blue thing? It's the weirdest thing, man. I had it. I put it in here, and now I can't find it again. I gotta go downstairs. Miss Linda from Florida has sent me all these markers. Oh, there it is. I gotta go down there and get them, but I left them downstairs. All right, so now Justin had 80,000 converted. 20,000 was his basis, and again, I'm assuming that's a non-deductible contribution that he made. That means $60,000 is included in his gross income for that year of 2017. All right, so he says, I just converted 80,000, 20,000 is my non-deductible contribution. 60,000 is what I got to include in my taxable income for that year, 2017. Fast forward till 2021, 5 years, Justin made a regular contribution of $5,000 to his Roth. On November 20 of 21, at the age of 60, he took $7,000 distribution from his Roth. The first $5,000 of his distribution is a return of his principal they just made that year. All right, so he's getting that $5,000 back. It's free and clear of any penalty or tax, and the fact he's over 60, by the way, and isn't included his income. The next $2,000 of the distribution isn't includable because it was included previously. All right, so basically they're saying, hey, the next $2,000 was right there from his initial non-taxable basis contributions, essentially. So, and that's not a great example, but it's pretty good. I mean, it says at the end, he's over 60 as well, but he's getting that tax-free because he's getting his contributions back, which include his non-deductible contributions that he converted. All right, so he's getting it. Basically, he has $25,000 of contributions in that regard. He's getting all $25,000 back. Now, you could say, what if he's got $80,000 in there? What if he wanted more than that? Because he's over the age of 59 and a half, and because this account has been open for over 5 years, it's all tax-free, man. I mean, if you're over the age of 59 and a half, the account's been open over 5 years, it's all tax-free. That's all there is to it. 2017, 18, 19, 20, 21, yeah, so he'd be good to go. But anyway, that's not a case for a lot of us here if we're under the age of 59 and a half. So stay tuned. My next video, I'll go into that right now. Love your thoughts. See ya.